Hi, and welcome again to another edition of Market Analysis for today, December the 9th. I'm Giovanni Benacourt. I'm an analyst, trader, and educator with Vantage Markets. Well, it is Friday and it's going to get interesting. It took more than a week of trading, but stocks finally had a good December day. After falling for 5 consecutive days to start the month, the S&P 500 rose 0.75% yesterday. That should come as good news to investors that count on December being one of the best months for stocks. The question among investors the last few days had been, what happened to Santa Claus rally? Well, the rally has to start somewhere, and there's a stream of big news coming that could sustain the gains or send the market reeling once again. It starts with a key inflation report out, already out today from the U.S. Labor, which releases the November producer price index, and the string of softer than expected inflation readings helped stocks through much of November. Now, it's possible that the momentum could pick up again if the month-over-month PPI comes in below the 0.2%, but it didn't come in at, and on that level, it came in at 0.3%, higher than expected from economists. Now, the year-over-year PPI was seen rising 7.2%, and this came in at 7.4% below October's 8% gain. Now, then on next Tuesday, the consumer price index is out. It come out. The CPI has been the most watched metric for months now and promises to be another big event when it released next week. That report is quickly followed on Wednesday by the Federal Reserve's next rate decision and Chairman Jerome Powell's press conference. By that point, we should have a good feel for where stocks are headed for the rest of the month. If we see further evidence of slowing inflation and get more rhetoric from the Fed that they will be slowing increases to give time to assess the impact on the economy of all the rate increases already in place, the stocks will have their best shot to finally stage a traditional year-end rally. But any optimism will still have to grapple with the bond market warning signals. The yield curve remains deeply inverted, with the 10-year Treasury yield trading 82 basis points, nearly a full percentage point. Now, this is below the 2-year yield. That dynamic, with long-term yields paying less than short-term ones, continues to be a sign of likely recession. So stay tuned for a busy few days ahead. Now, on the energy front, oil prices are trading well below the $80 a barrel just 1 month after traders were betting on $200 oil, a trend that has caught some off guard, given expectations that Europe's sanctions on Russian crude shipments will send prices higher, not lower. Now, we have some points to talk about. The drop comes after record profit for major oil producers. Washington wants them to keep pumping oil to hold down the price of gasoline. ExxonMobil announced it will expand its share buybacks to $50 billion through 2024 from $30 billion and spend $17 billion to reduce greenhouse gas emissions. Chevron's 2023 capital spending budget will be $17 billion, up more than 25 from 2022's expected spending, excluding acquisitions. Now, CEO Mike Wirth said the spending is consistent with long-term plans to safely deliver higher returns and lower carbon. Now, Brent crude, the international benchmark, it traded around $76.50 a barrel yesterday, while West Texas Intermediate WTI was around $71.75 a barrel. Now, gasoline pump prices have dropped to $3.29 a gallon in U.S. gas stations. Also, in October, if you recall, the White House said it will buy oil to refill the strategic petroleum reserve when prices were $67 to $72 a barrel or less. And also, the Organization of the Petroleum Exporting Country and its IDAs have declined to expand output, but said they will act if the market becomes unbalanced. So with that being said, let's take a look at how the markets are reacting to that PPI number. Well, before the PPI number, we were looking at the NASDAQ perhaps taking a nice shot at a resistance, but that number came out harder than expected. So we are seeing that retracement, even way below our 21 exponential moving average, that has sent the RSI below 50. The 50 level is a marker for the momentum of price direction. Of above 50 is good for the bulls. With a price rising below 50, meaning that prices are going to be lowering. Therefore, meaning that if it reaches 30, it'll be oversold. If it reaches 70, it'll be overbought. So right now we are contemplating that because of that reading. Markets will most likely, when the market opens about 45 minutes, we'll see the price, indices fluctuating below or looking to break and close the day below our support level. Anything First of all, we'll have to revisit our lows that we have done here, which is around 11,400, around that level, if it does breaks, okay? So keep that in mind. As far as for the S&P, well, the S&P is already trading below our support level of 39.50 because of that news. RSI is pointing lower, so most likely when the market opens, we will come down. And now, since we're already trading below, I might as well just lower my. I'm gonna lower my. Wait a minute. 1, 2, 3. Okay, let's leave it here because it could be a good place for support. So my resistance, I'm just gonna bring it down to here. So sales, shorting the market right now is what seems to be happening. As far as crude oil goes, well, crude oil, that number 72, we want to, Washington wants to see that price lower. So I have $70 as my support so far. We will probably come in and visit that level. We had a low yesterday of 71.75, so it could probably happen. As far as NAT goes, well, NAT has made a nice little rump up to the upside. $6 is my resistance. The see RSI is pointing higher, so in favor of buying nat gas. Well, gold briefly traded above 1800. It has retraced a whole lot from it, so let's see if we could probably come down and test our support. Then we have silver, the same token. It made an attempt at 23.50, that previous high made on December 5th. Is retracing back. $23 is my initial psychological support since it's retracing. Copper is the same token. Let's see if it'll hold, or will it retrace back down. And I believe the dollar index has something to do about the fluctuation of the metals. Then we have Bitcoin that has finally broken that previously resistance. Now it turned out to support. So now it's trading about that support and let's see if it'll hold, if it'll do the same as it did as a resistance. Then we have the euro. Euro is retracing, or is looking to hold right around 105, 500. So let's see if that happens. Pound is as well 122, 700. Let's see if it happens, because the dollar index most likely is bouncing off that support level of 104, 500. So it's retracing back up. Let's see if it goes back up to a 105 because of this news. If that happens, obviously we're gonna see lower currencies and lower metals. And I have something that I want to bring to your attention. This is the wheat chart. Now, wheat has been trading lower, okay, as you could probably see. So this movement just really comes out as because there is a glut of wheat in different sections of the world. Russia, obviously, being a big part of it, and Ukraine. So there is a glut of wheat, and probably that will continue to go lower unless it has found support here or the bottom at 7, and then looking to rebound back up again. But I'm in favor of shorting wheat, so keep that in mind. Do some research on it and see if that holds water. Well, that's it for me today. I wish you a happy and nice weekend, and I'll see you Monday.